I suppose we should start with Apple. You appear to be comparatively. The expression that has been used is good enough for now. Does that make sense? That, in my opinion, was as bullish as Cupertino and Cook could have made it before the iPhone 16 cycle had started. In addition to the guidance, I believe that this is China's final quarter of negative results when compared year over year. It turns into a tailwind. Take a look at services. That seems really reliable to me. I would rate it a 98 relative on a scale of 1 to 10. It's difficult to be pessimistic about Apple entering what I see as an AI-driven supercycle for the iPhone 16, which is why I believe this stock can overcome the challenges we're seeing. Will that strength be debated against the concerns of the macro consumer? We merely talked about it for 10 minutes. That's the argument, you see. But I'll be in Asia once again this week. From what we've seen, we started with 80 million devices for the iPhone 16. It's up to 90 now. We've discussed this topic extensively, so it will be a balancing act. However, when it comes to the data of the quarter and what you saw from Microsoft, Azure, Google, and AWS for Amazon, you consider what you observed from each of these perspectives. Despite the white knuckles we're witnessing in the market, I think the tale of the AI revolution is intact, and all of our checks indicate that now is not the time to panic. According to FT, Elliott Management recently informed investors that Nvidia is in a bubble, AI technology is overhyped, and the hype does not reflect reality. I'd know you disagree completely. I couldn't be more at odds. We arrived before the conference calls and earnings. I believe we even discussed it. Now let's examine the numbers. Examine the Azure acceleration. Take a look at what Lisa Su from AMD discussed. In terms of Azure acceleration, we observed what we considered to be disappointing, and they are providing guidance for the second half. That explains the monetization in great detail. That time is now. The bigots have persisted in their hatred, in my opinion. For the past few years, the bears have been there. I understand. We don't see it, but it's simple to come out and sort of cry fire into a packed theater right now. You realize that the value matches the buzz since it's not only from the call. In fact, I believe the street is underestimating the trillions of dollars in AI capital expenditures that will occur throughout tech over the next 3 to 4 years. There is nothing here that contradicts that in any manner. Dan, you're correct. To your point, none of them are abandoning their capital expenditure plans. I mean, AWS revenue growth really accelerated, going up 19%. However, there is still the more significant question of whether you will eventually see that return on investment. Naturally, you think that will be the case, but what do you think will happen in the near future in terms of applications that will begin to allay any concerns that some investors may have from an enterprise standpoint? In a few weeks, we will also hear from Nvidia and Godfather Bait-Gens. Both the use cases and the number of businesses currently pursuing AI have increased by 45 times. These businesses are therefore headed towards what I think will be use cases in the fields of retail, insurance, healthcare, and finance. It's all about monetization, as we've always discussed. Spending is present, and based on what Sue Medela and Sundar Pichai have said, I believe that a revolution is taking place. Right now, the monetization phase is just getting started. I won't claim that there will be a gap between revenue and capital expenditures, but in terms of where we eventually see, the real install base, I think it would be like betting against Cook and $2.2 trillion to bet on this and against it. And you see that Apple is genuinely on the verge of an AI revolution. That's a risky proposition. Do you think it could last a year? Unless that occurs within a year, correct. Would you become anxious if the rhetoric remained the same? In my opinion, if we are sitting here in January or February and we haven't seen it, we haven't seen the monetization from a software perspective, we haven't seen it from an actual standpoint, just Mag 7 or what we call the second, third, or fourth derivative, then we should definitely look into it more closely. In fact, it's more encouraging right now because of what we see, including our paychecks and profits. Bill McDermott has never said anything unfavorable about it. He has, after all, turned around before, and it emerges. Despite the fact that many people are currently putting petrol on the fire, I'll accept McDermott, Sue Medela, and Cook if they see something. Get your Nvidia keychain now for less than $10. We are offering a huge discount exclusively to the first 100 orders. Finally, I'll discuss Nvidia, where the Blackwell platform is experiencing delays. In the industry, design delays are extremely prevalent, and their major clients and partners are aware of this. However, the fact that demand is robust is what counts. Demand for their present platform is robust. Their ecosystem is still thriving, and Nvidia is at the center of this still infancy development of digital and AI infrastructure. That's why I still adore that name. How do you currently view Nvidia minus 98.48 in a year, in 24 months? How much do you think this business is worth? I can't give you a particular price goal, but I believe the company's worth is much more than it is now. In my opinion, however, what you're witnessing in their clients' environments, in cloud environments, is that clients are investing in NVIDIA solutions and reaping the benefits within businesses. Those environments have changed for you. Digital twins are used in manufacturing, for instance. NVIDIA solutions are speeding up drug discovery, research on financial services, fraud detection, and climate detection. As a result, a wide variety of novel use cases are becoming more popular. And in my opinion, those will be much larger in 12 and definitely 24 months. And NVIDIA will see that in their financial statements, which will influence the performance of the share price. Additionally, Alphabet and Meta are both rather inexpensive these days. Microsoft is not very inexpensive, but their valuations will increase. That's why I haven't done anything in the past several days. As I indicated on the radio, I did purchase a small amount of Facebook, or Meta, during the major collapse. But it hasn't made a difference because the market is trading as a single entity. They failed to discern between exceptional management, entrenched growth, and fortress balance sheets. They're eliminating them all. Therefore, I am unsure of the catalyst. As we discussed, the economic data that will be released this week are, in my opinion, the catalysts for the future. Because they will all be taken down if the data is poor and indicates a struggling economy. And that is when you come in. I have nothing to do on such days, which is the reason I dislike the market return at current levels. I don't buy the momentum, and I don't sell my core names. In order to discover others and add to my already full holdings, I need a true washout of the market. Jimmy, the Semis, look, after the sell-off, Heath Lerner, a true upgraded tech to overweight presently. This is one topic that comes to mind when discussing what people find more appealing. Additionally, if you observe how semi-names performed this week, we're going to. Let's consider Nvidia. It's not necessary to bring up Nvidia in every semi-conversation. This week, Taiwan CME is up 10.5%. All of them had fairly good weeks. Cadence and KLA, ASML, Lam, Applied, onsemi, Teradyne, and Qualcomm. They're on sale, you see. We can discuss Qualcomm, even if you don't want to discuss Nvidia. I don't give a damn. They are now for sale. Not too long ago, Qualcomm was just 23. Today, it is somewhere around 165. In addition, the company's prospects hadn't much changed in the last 2 months. I love it even more here, if you loved it as much as I did when it surpassed 200. To answer your question, Steve, I don't care whether you join me at Qualcomm, but this isn't your day. Hold off for a week or a few days. This is simply the current state of the markets. Returning to what I said earlier, though, if you enjoy Qualcomm and Applied Materials, which I also own, and you don't have enough of it, you can purchase it here. Like Steve, you can wait a few days. In other words, given the rate of growth for chips, these stocks are probably going to be much higher in 3, 6, or 12 months. I will now briefly visit Nvidia Scott, as the company's stock is currently trading at a 32-fold forward multiple, and its earnings per share growth rate is anticipated to be 35%. It's for sale. The P/E ratio is less than 1. It's for sale. Get your Nvidia keychain now for less than $10. We are offering a huge discount exclusively to the first 100 orders. If you require any other changes, please let me know.